So if your goal was to buy a house at some point in your life, the last few years have been miserable for you guys because we've seen house prices go up and up and up and up. And now we see mortgage rates continuing to rally along with those, putting home affordability basically out of reach for millions of people. So what we're going to talk about today is this is a huge week for the Fed. Okay, the Federal Reserve is basically in the market right now, and they're controlling everything. If you have a stock portfolio, whatever they say is affecting that. If you're looking to buy a house, whatever they say is affecting that. If you have a large credit card debt, well, whatever they're doing is really affecting you guys. So the whole context of today's video is what the Federal Reserve is. What do they do? Why are they there? What are they doing to curtail all of this? And what is the final result going to be? So the biggest thing we want to first figure out is what the Federal Reserve is. Why were they created? Well, the first piece of this puzzle is this right here. The Federal Reserve has two mandates. Let me get out of the phrase for a second. You can see maximum employment and price stability. What is that? Okay, so basically the Federal Reserve is created for maximum employment and price stability. Okay, so their job is to keep the economy in check. Okay, keep prices in line for supply demand and keep employment or jobs at full employment. So right now they're tackling the one big piece of this puzzle because we know the job market's pretty good, but the other piece of the puzzle, the inflation number. Okay, so let's first look over the inflation numbers that get monitored to really microscope in on this so you guys can see for yourself where is inflation, where is it today, what's the components of it, and what's the projection of in the future. Why are we doing this? Because we're trying to figure out what the Federal Reserve is going to do. Because if inflation continues to rally and push up, they're going to keep pushing up rates. Okay, so that's going to affect you guys if you're looking to buy a house in 2022 or maybe 2023. So let's break all this down. First off, let's look at this week's economic calendar. We see it right in front of you. The CPI, that's the Consumer Price Index, basically consumer inflation. That's the best way to put that. You can see on Wednesday, the PPI. What's that? Well, that's the Producer Price Index. How much inflation is at the producer level? Okay, so those are the two biggest components. And then you can see down through there on Thursday, we have core retail sales and job reports and things like that. So today or this week is action-packed with information coming that the Federal Reserve is really going to monitor. So let's break this all down. What is the CPI number? What's the inflation number that they're going to monitor that's coming out tomorrow? So to break that down in its components, here it is. Here's a pie chart, and I'll put the link to this video or to this website down below. Here's what the Federal Reserve monitors in the CPI, and here's the components of the CPI. Okay, you can see there. Housing is in there. So if you guys are wondering, if housing is part of the CPI or not, it is. And I'm going to show you the calculation here in 1 second. It's right here. It's really simple form. Just put this together and you'll figure out where the housing inflation is going. I'm just kidding. I'll put this all together for you. But I want you to see these are the biggest components of that. But this is where I was saying, thank goodness that the college tuition isn't a part of the CPI number. So if you want to see how much in asset value something went up over the last 20 years, here it is. Okay, well, the college tuition, which is the dotted orange line that just basically dwarfs everything, thank goodness it's not a part of our inflation numbers, because if it was, our inflation numbers would be double or triple what they were. But the other component below there, if you don't look at which each color code means, you would think, well, the red line's probably housing, because look at that number. It far exceeds everything else as well. Well, no, that's medical costs. So maybe, just maybe, if we kind of put a lid on our college tuition to quit gouging our children, and also maybe a part of the Affordable Cares Act and some of the other things the government does should put a cap on our medical costs, those two components would basically drop inflation. Well, why is this important for you guys out there to looking to buy your first house? Because the Federal Reserve is in control of everything, even rates. So what they're going to do is they're going to monitor all this information until the next meeting, and then they're going to come out and make a decision. Well, they haven't really made a decision yet. Coming into the other meetings, they basically came out and there was a 90% chance that they were going to raise rates, X percentage. But at this meeting, the assumption is they're probably going to do 75 basis points, but they haven't told us yet. So you can now see why this week's data, we have the CPI number coming out, we have the PPI number coming out, and we have a jobs report coming out, is so important for us going into next week's Fed meeting. So now, why are you here? Well, you're here probably to figure out what's going on with mortgage rates. So let's get over to that now. Well, if you remember what the economic calendar looked like, there's no news today. So we basically have no bad news. Well, maybe no good news today. So here's what's going on in the MBS market. This is the bond that trades on Wall Street that gives us the biggest factor of our mortgage rates, the yield on this thing. So basically all you need to know on this is what's going on with the price of a mortgage-backed security bond that's trading on Wall Street right now. As this price goes up like it's doing right now, as the price of a bond goes up, rates, in this case, mortgage rates, are coming down. So this is good news. Whatever came out today is good news for the market. So let's go over to Mortgage News Daily to figure out where rates are today. So this is the report from Mortgage News Daily. They put this out every day. This isn't a bank's rate sheet. This isn't my rate sheet. This isn't any particular lender's rate sheet. These are the national averages. So what Mortgage News Daily does every day is they survey mortgage lenders all over the country and said, hey, if you had a client that was looking to buy a $500,000 house with a 740 credit score, is going to be their primary home, single family residency, and they were putting down 20%, what would be their interest rate? And here's where they are. So they've come down a little bit from where we were the other day. I last reported last Wednesday when rates were about 6.25. So we're about a quarter off of where we were. Tomorrow's CPI number is going to be huge. If that number exceeds 8.1%, we're going to see the stock market basically plummet, and we're going to see mortgage rates jump. If my expectations come in true, I'm expecting a CPI number under 8 or below. If we see that, you're probably going to see mortgage rates tick down some, and you're going to see the stock market rally. I'm going to do a video to explain why all this takes effect, and maybe I'll post that later this week or next week so you guys can figure out when the Fed makes a move, why does it make the stock market and the mortgage rates move? Well, to find out more about me and my team, all you have to do is go to therateupdate.com. If you need help with a mortgage of any kind, if you're looking to get pre-approved, do a construction loan, do a refinance or reverse mortgage debt consolidation, anything, we would love to help. Thank you so much for watching. God bless. I'll see you tomorrow. Bye-bye.